Hi there, welcome to kneppyinvests. Even though we are heading towards the end of the financial year in Australia, I still want to do a few more March quarter Appendix 4Cs, and De.mem is one of those companies I want to look at. And the other reason I wanted to look at De.mem, it has been requested by a few viewers. Fortunately, De.mem actually did release a trading update on the 3rd of June, so we do have an idea of how they're performing in the current June quarter. So I'll touch upon that trading update, and I'll also look at their Appendix 4C. So the main focus of this video is that Appendix 4C. De.mem stands for Decentralized Membranes, and this company designs, builds, owns, and operates water and wastewater treatment systems for their clients. They do have a fairly impressive client base, including Rio Tinto, AGL. They even have Coca-Cola as one of their clients. Maybe De.mem employees get free Coke drinks. Who knows? Because they are in water and wastewater treatment, I do think that area or that space is going to be increasingly important and valuable for everyone on this planet. Water is a right. We all have the right for access to clean and usable water. Unfortunately, that right is probably not given to a lot of people on this planet, and I think it's going to be increasingly big problem over the next few decades, and these sort of companies like De.mem will become increasingly more important. So before we look at their Appendix 4C for the March quarter, just a few facts in regards to this company. De.mem's ticker code is naturally enough De.mem, which seems easy and natural fit for a company called De.mem. Anyway, before I talk about the financials of the company, I should just point out that they do have two main subsidiaries, one in Singapore called De.mem, and the Australian subsidiary is called AquaWorks. Aqua is not spelt with a QU, it's actually spelled AKWA, and I believe Works is WORX, based out of Caboolture, just to the north of Brisbane. They have also made an acquisition in the past month or so. I'll talk about that acquisition in about 3 slides when I look at the chart. Market cap of De.mem is 63 million. I'll probably say that's not overvalued or undervalued, so probably fair value at these prices. So even though I am interested in taking a position in this company, I'm not in a rush. And one of the reasons I'm not in a rush is because they're not operational cash flow positive just yet. If they were, I do believe the valuation of this company would be significantly higher. And even the price to sales ratio of 4.5 is not excessively too high or even excessively too low. If you want to have a look at their Appendix 4C, they released that on the 29th of April. They've released a fair few investor presentations over the past 3 or 4 months. And they also released a trading update on the 3rd of June, which I'll touch upon later in the video. So now let's have a look at their Appendix 4C that they released in April, the 29th of April this year. As always, when I open up an Appendix 4C, I go straight to Section 1 of the Statement of Cash Flows, and that Section 1 is cash flows from operating activities. In my opinion, this is the most important part of the Appendix 4C because this is where we see how the company we're looking at is performing in the day-to-day business. There are 2 numbers I like to focus on in Section 1. The first one is receipts from customers, found right at the top. Now, in isolation, this doesn't tell us anything. We need to know the trend, or I like to see a trend, and we'll look at the trend in the next slide. But for De.mem, in the March quarter, they received $3.5 million in receipts from customers. The next and probably the most important part of Section 1, and so because it's the most important part of the most important section, that means it must be the most important part of the Appendix 4C. And it is, in a way, because this tells us if the company is operational cash flow positive or negative. So are they losing money in operations or making money on operations? And I do believe that's a very important distinction to make for any business you're looking at. And for De.mem, they were actually losing money in operations by $761,000. So because they're losing money, we need to know how much cash they have on hand at the end of the quarter, because if they don't have enough cash on hand to fund their operations, that means they might have to raise money for their future or for their working capital. The good thing about De.mem is they have plenty of cash on hand by the end of the quarter, $9.2 million. You might question if they are losing cash in operations, how did they grow cash from $5 million to $9.2 million? And it's all about capital raising. They did a capital raising during the quarter, which raised a lot of money. And the main purpose for the capital raising was an acquisition, which I'll touch upon in a few slides. So now we've looked at the Appendix 4C, and I just want to focus on the receipts from customers trend, which we'll look at in the next slide. Generally, when I look at the receipts history for a company, I want at least 2 years or 8 quarters of data to determine whether I have my preferred upwards trend in receipts. Fortunately for De.mem, we have 4 years of data going back to the March quarter in 2017, when De.mem received $10,000 in receipts. And they've grown receipts from that initial $10,000 to a current number of $3.5 million. So definitely they are growing receipts, albeit off a low base. $10,000 is sort of low. The contrarian in me did see this, however, and look at the past 6 quarters and think, well, maybe receipts have leveled off if you ignore the December quarter where they received $5.6 million, because the most recent quarter, the March quarter, receipts went back to that $3.5 million. So I was thinking there is a potential that that $5.6 million was an outlier. Now the good news. In their June 3rd update, trading update, they did announce they are expecting receipts to be, for the current quarter, to be between $4.5 and $5 million. So that's up there towards that $5.6 million. So now I'm thinking that the company's receipts profile going back to October 2019, that leveling off in receipts could have been COVID-19 affected, and the company is going back to a growth profile. So hopefully that is true, because that makes it a little bit more, we'll say, a little bit more appealing to take a position in this company. Onto the 2-year daily chart for De.mem. And the reason I want to go back 2 years is we can see the share price of the company was in a nice little bull run that finished in October 2019 at a share price of around 35 cents. And the reason I want to point that out is 35 cents seems to be a strong resistance level for this company, because it's reached that share price about 3 times, and each time it's reached it, it's failed. The share price has pulled back. In the future, if I see the share price of De.mem move through 35 cents on strong volume on the back of a positive financial announcement, that would be a good price to buy into this company. If we go back to June 2020, the share price of De.mem moved into a nice looking uptrend, and during that uptrend period, which lasted about 9 months, the company released 3 Appendix 4Cs. And the last Appendix 4C the company released towards the end of January 2021, the market received that Appendix 4C quite favorably. In fact, the share price went up 15% on that day. And the reason the market loved that announcement was not only were there $5.6 million in receipts, the company also announced they were operational cash flow positive by $500,000. So there would have been some segments in the market that thought that could have been the inflection point for the company. About a month and a half later, De.mem announced an acquisition and a capital raising on the 16th of March. The acquisition was a company called Capic, or Capic, C-A-P-I-C. Capic is a supplier of specialty chemicals to miners like BHP, Northern Star, Pilbara Minerals. $3.3 million of revenue, $600,000 EBITDA positive. De.mem was going to fund this acquisition through $3.4 million of cash and $1 million of shares. So they needed to do a capital raising to fund this acquisition. The market didn't really take kindly to this announcement. Share price went down to a low of about 26 or 27 cents and then bounced a little bit before they announced released their next Appendix 4C towards the end of April. And again, because that Appendix 4C did disappoint the market, their share price then did pull back. I was a little bit surprised when they released a trading update on the 3rd of June. The market didn't respond more favorably. So that was a bit of a surprise, because they are expecting between $4.5 and $5 million of cash receipts. So it does look like the Appendix 4C, they will release sometime, more than likely towards the end of July. There is potential, again, they're going to be operational cash flow positive. So I did expect a better response from the market. However, that lack of response could be leading to an opportunity for us, the private investors, to buy into this company before the market sees that Appendix 4C and the share price again potentially takes off. That is all I have for this video of De.mem, their trading update and Appendix 4C. For some reason, this video has taken a long time to do. I just haven't had my mojo today. I need my mojo when I do these videos. My throat is actually getting a little bit sore, so hopefully I'm not getting sick. If you do have any questions about this company, leave a comment or a question in the comment section. I'll answer anything you have to say ASAP or the next week or so. Otherwise, I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Bye.